Hello, everyone. This is Dan Gramza, and welcome to dangramza.com Market Studies for Monday, November 17th. The way we finished the week out, as we've been talking about in the advanced video, very interesting in these indices. You can see here in the S&P, structurally, they're buying the break. And we've seen consistency of behavior in terms of how the market's reacted at these price levels. So we've gotten low enough to find buyers. The issue now is, do they follow through? And if they do have new buyers coming into the market, remember, this could be sellers buying to take profits. But if it's new buyers, if it's gotten cheap enough to find new buyers, we should see evidence of that on Monday. We do look for follow through to the upside. Now, if you haven't seen these videos, these are daily charts. The concept, it's a swing trade. These are not trade recommendations, but just ideas that I want to share with you. Now, the dollar difference, oh, by the way, red is sell, green is buy. Dash lines means it's something that happened earlier in the week. If it's a solid line, that means it's active. And if it's a solid green line, that's an active buy level. And then, by the way, you can go back over 10 years and look at previous videos, and you can see how these lines, these red and green lines, change over time. But the dollar difference, that sell to buy level, just to give you a feel for that, is $650 a contract. Now, from this buy level to that sell level, that's $3,600 a contract. Again, it looks like a bouncy market. Let's see if those buyers can get the job done. Now, let's look at the NASDAQ market. Very similar structurally. Remember, these indices have a very similar dispersion of market sectors. And so we're seeing action here that's similar. Dollar difference sell to buy level in that market is $4,940 a contract. If we look at what's going on with the Dow, now this one is constructed differently. It responds in a different way than the other indices. For example, it does not have the same exposure as the Dow, as the NASDAQ and S&P with tech stocks. The NASDAQ, for example, has an exposure for tech stocks of about 48%. But they are buying the break. This implies an inside day on Monday over in the Russell. Now, these are small to mid-cap stocks. Also, bouncing on the lows. They bought the break, but can they follow through? That's going to be the issue to watch for in that market. Difference between the sell and buy level, $600 a contract. Now, in the currencies, the euro is getting stronger, which means the dollar is weaker. Friday, we see some selling. Do we look for it to come off? Is it a rest day? Sunday night, 5 o'clock Chicago time, will give us insights into what we can expect this coming weeks. So we'll have to keep our eye on that. Take a look at what's happening with the Canadian dollar, breaking lower, but it got buyers coming back in, and this implies Monday a stronger day for that market, so a stronger Canadian dollar. Let's go back here to Bitcoin. Bitcoin is still on the weak side. It hasn't gotten low enough to find evidence of buyers. Further weakness to the downside, yes, that is what we're looking for. A dramatic move down, no. This actually was bigger than I expected on Friday. Oh, dollar difference up here between the buy and sell level is $650 a contract. Now, let's see what's happening here in interest rates. 10-year notes, we're finding sellers. Yields were stronger. Prices are going down. Dollar difference buy to sell level is $125 a contract. 30-year bonds in the same boat. Looking for continued weakness there. Gold. The market traded below its sell level, dollar difference. Buy to sell level is $5,100 a contract. Be careful here on the short side. This is where we've seen buyers before. And the same thing holds true in silver. The buy to sell level in that market is $19,950 a contract. Copper. Copper is an example of fundamentals and technicals that do not line up. Do we have global demand to drive this market in copper? I don't think we do. And the result is we are going sideways. It does have a bullish bias, but so far it has not been able to get the job done. So be careful here. Difference between the buy and sell level, $1,500 a contract. Crude oil firming up a bit. I don't look for strong follow through in this market. We have a lot of crude out there right now, and we're not seeing demand totally soak it up. And part of the demand that's missing here in crude and in copper is China. They're buying, but not to the levels you need to, I think, to sustain a move in that market. But well, if you look at the buy to sell level here, that's $410 a contract. And the dollar difference, that sell to this buy level, is $1,230 a contract. Nat gas traded below its sell level but did not sustain that to the downside. That means if we were a seller here, it's unprofitable. We have a loss in that market if it is still maintained. Dollar difference here is $800 a contract. If we look at what's going on with soybeans, yes, there is some buying present. Yes, yield did come off a bit. China so far has not met the commitment of 12 million bushels before the year end. So there's some doubtful action here in that market. Let's see what's happening in corn. Another market that did back off, dollar difference, sell to buy or buy to sell level. That's $400 a contract. I'm not looking for another big day though, down on Monday. Same thing holds true for wheat. Be guarded if you're on the short side for that market. Buy to sell level there in that market was $750 a contract. Well, those are my thoughts for today. Thank you for joining me. Look forward to being with you again. And as always, take care.